Time for another stock review. This time we're talking Raytheon RTX Corporation. And it's very timely now with what's going on in the world with Iran, the Middle East, and what's coming up for the US government now. We've got a new bill being passed to supply more arms. So all of this now is going to be very, very important. And we're not just talking, of course, weapons. We're talking space, satellite, technology, all the rest of it. So we are looking at Raytheon this afternoon. This is being made during a live video, and we're talking defense, and we are all over it today. So let's get ready. It's going to be a very big review. And here it comes, Raytheon. This was ordered today by one of our members. During the making of this video, you are going to see a full, an extended review. There's a $100 super chat today for this, so that's why all the B-roll, all the special effects have been added. It's a full production video made live. We're looking at the numbers, the balance sheet, the profit, the loss, the solvency score, who's buying, who's selling. We're also going to look at the balance sheet and the latest news. Let me share with you on the screen right now. I've got some latest news for you just out. I want to share with you what's going on with the business. We've got I've done some reviews, ratings for you. We're going to look at the chart, see where it's going, back test to the S&P 500, all latest earnings results, latest news, where we go next. All of that's coming up in this review. It's going to be a very, very in-depth review of Raytheon. So we are talking defense today. Of course, we've got the government about to pass a bill giving more money into defense. It's going across to Ukraine and Israel and all the rest of it. So Raytheon might be a very interesting stock to look at right now. What do you think? It's a great company, but is it overbought? Is it too expensive? Can you make money from this? Well, that's what we're about to find out. Can we turn the money printer on and make money with Raytheon right now? Well, let's get straight into it. We're talking defense, of course. And for those of you who don't know much about the stock, it's just down the road from me here in Dallas, actually. I live just down the road. Anyway, let's have a look at the stock and then go through it in some detail. We're going to start off nice and simple and get much more detailed as we go. All right. RTX. One of my members has just mentioned that's why I've just got a deal. I've just bought MOBX. Yes, we've just covered Mobix earlier on. They're involved with Raytheon as well. And Vincent Vosberg, did you see your video? I've just put your review out for you. Let me know if you saw it. Your review has just gone out. And some Mobix news, all to do with Raytheon as well. So there we go. Now, there is the line chart, the basic line chart. Now, you may recognize that and think, hang on a minute, I've seen this before. You probably have. You probably have. Let's look at the S&P 500. It's a blue chip. It's a solid company. The Raytheon is in blue and the S&P 500 is in red. It does kind of run parallel. You can see when the S&P goes up, so does Raytheon. When the S&P goes down, so does Raytheon. But now we're likely to get a big rally once again in the in Raytheon. Anyway, here we go. Raytheon is in blue. $10,000 would have returned you 27, a 3x since 2011. Whereas the S&P 500, 10,000 would have returned you 53,000, a 5x in red. So you can see. But as we look at the chart, you can see how it does trend along the same line. But of course, and that is with reinvesting the dividends. I just want to be clear on both stocks because we do have a dividend situation here with Raytheon. I will share the dividend position for you as well. I normally put this at the end of the video, but I'm putting it at the beginning of the video this time. Is it a dividend king? Well, let's have a look. You can see here in 2007, it paid 117, 134, 154, and then it dropped to 42. Okay, so to that 2010, we reset. 42, 42, 42, 48, 48, 48, 53, 53, 59, 59, 64, 64, 66, 70, 70, 70, 73, 73, 40, and then it dropped to 47. So already I'm going to tell you it's not a dividend king. It's not a J&J, it's not a Coca-Cola. It does have volatility to it. Back down at 47, 51, 51, 55, 59, and we are now at 59, and our next payout was March 24. Next payout is June 13. So it's consistent payout, but it's not consistently moving up. So you can't rely on it like that. But nevertheless, it's a good, solid dividend. And in fact, if we look at the payout, it actually is 2.33% there. You can see there. There is the yield there. But it's not always. It doesn't always pay out exactly the same and doesn't continue growing. It gets reset and starts again. So it's not a dividend king, but nevertheless, it is a good asset. Now then, some more information before we get into the numbers, the balance sheet, the news, and other things like that. Let's just break down what you're actually getting here. RTX Corporation is an aerospace and defense company which engages in the provision of aerospace and defense systems and services for commercial, military, and government customers. It operates through the following segments: Collins Aerospace Systems, Pratt & Whitney, Raytheon, Intelligence and Space, RIS, and Raytheon Missiles and Defense, RMD. The Collins segment manufactures and sells aerostructures, avionics, interiors, mechanical systems, mission systems, and power controls. The Pratt & Whitney segment includes the design and manufacture of aircraft engines and auxiliary power systems for commercial, military, and business aircraft. The RIS segment is involved in the development of sensors, training, and cyber and software solutions. The RMD segment offers end-to-end. Where am I a minute? I lost my place there. End-to-end solutions to detect, track, and engage threats. The company was founded in 1922 and is headquartered in Arlington, VA. The CEO is Gregory J. Hayes. I invite Gregory J. Hayes onto the show. My investors will contact you, I'm sure, and invite you onto the show. How do you come onto the show? Well, my investors will create groups, Facebook pages, Reddit groups around this stock, and they'll use my videos. I will provide you with the my investors. I will provide you with all the information you need. I will cover the earnings at your request, news at your request. I'll also do an analysis like this, which I can provide then to your online group. You then can pass that on and tag in Gregory Hayes, the CEO, and the company. Also, perhaps you might like to email investor relations and invite them onto the show. I'd love to have them on the show. You do the whole thing. You're the investor. They love to hear from the investors. Remember, I'm not in the stock. I only own the S&P. I'm not here to pump and dump stocks, but I am here to support my members and my members to make money and bring great stories and news to the world about great companies that solve problems. That's my job. That's what I aim to do. So please do talk to the investor relations, talk to Gregory Hayes, and when you get them interested, then they can contact me and then we can book them in on the show. All right, 185,000 employees, Arlington, Virginia, founded in 1922. It's regarded as low risk. Maintenance requirement is exactly the same as VU, 25%. The S&P 500, that is. Market cap, 134 billion. 52-week high, 103. 68 is the 52-week low. So there is still volatility here, even though it does trend up. It's a good stock to trade or a long-term investment. I'm a long-term investor anyway, but you can obviously trade this if you want to. 2.33 dividend. We just spoke about it a few moments ago. All right, have we got any reviews here on this page here? This is just Morningstar. I don't like Morningstar's reviews, of course. They're paid to say these things. I prefer to do my own. I'm not sponsored by anyone. I provide the best information because it's unbiased, it's real, it's detailed, and it's very concise, and no one pays me to do it. but they are saying it's a buy or a hold. Hold now, it's got very expensive recently. If we look at the price to earnings ratio, 45, it's expensive. However, you need to compare that to the competition. I will give you the links to the competition in a minute, and you can compare and see who is the best value. You might want to do that, all right? Scrolling down, the bulls are saying RTX is a well-balanced between commercial aerospace and defense, which would partially insulate the firm from a downturn in either segment. That is true. The bears, however, are saying repairing manufacturing defects in some Pratt & Whitney engines will cost the company billions in compensation to customers and may reduce airlines' appetite for the products. Okay, fair comment. Scroll down. The fair value of this is $112. That's the fair value of the stock. So we're undervalued. However, I will give you my estimate if we are undervalued very shortly. That's what Morningstar say. Economic moat wide. The economic moat means their margins are wide. That's what it means. They can reduce to cut prices and still remain competitive. That's what that means. Uncertainty medium, stewardship exemplary. Okay, great. As you can see, they consistently beat earnings, which is great, and consistently trend up, which is even better. Very, very good, solid company. They only reported yesterday. Their estimate yesterday was 123. They did 134. We'll have more details on that earnings in a few moments. Who else is buying the stock to give you an idea of the volatility, how it trades? Who is buying the stock? Lockheed, Northrop Grumman, General Dynamics, Boeing, ExxonMobil, and Chevron. Solid blue chip companies. Good to see. No mullen, no scam stocks here. Solid, reliable companies. That means the stock it does have trading volatility, but it doesn't have scalp trading nonsense that you get with such rubbish companies like Mullen, one of the worst companies on the stock market. All right, so it's a good blue chip company. Okay, now we've looked already at the dividends. I've shared that with you, so we've done with that. I've also shared with you the S&P 500, so a comparison. So we've done with that. Let's go and have a quick look at the chart. You can see the difference between the red and green candles. We did have a big push up here. This was January the 23rd of 24. Big rise here. So obviously the first thing that you want to do is look on the investor pages and see what this event was and can it repeat itself. We've also got similar size of candles occurring again. So I'm guessing this was a war-related event and now we're getting it again. Last weekend, of course, over here when we had the situation with Iran and Israel. So is that going to continue? I would say it's likely. What's going on with the US government now? There's a bill going to be passed sending billions of dollars to Ukraine and Israel, and it benefits Raytheon, it benefits Mobix, it benefits other companies that we're talking about, Lockheed. All of these companies I think are going to do well. American businesses are going to do well. So I'm also going to give you this rating here. Put together this rating here for you. It's a strong buy or a hold, even quant, which is Seeking Alpha's analysis software. They're saying it's a strong buy as well. Very aggressive, that quant software. But yeah, buy, hold, and strong buy. Now look at this, how factors have improved. If we look at the major factors here, revision, C+, D+, now B+. Momentum, D, C, and now B. Profitability, A+, A+. Growth, C-, D+, and now C. So you can see things are all going in the right direction. It's looking very, very solid for Raytheon at this point. Okay. Now then, you know the business. We discussed what it is. This is more information on their website. You can see about the business. Collins Aerospace, redefining aerospace. Pratt & Whitney, we've talked about that earlier. Defense, we've talked about that. Raytheon, there's just a little bit of information there. Satellite technology, we were just showing you some of that just a few moments ago, what this company is all about. But we are talking particularly defense right now. Defense is what we're interested in. And satellites, defense, military, supplying the military, of course, the Javelin, of course, that's a big deal with Raytheon, Mobix as well, involved with Raytheon. All of this we're looking at the moment. But don't forget, it's not just about the military. It's also the military in space as well. Yes, we are talking in space, defense, and we're looking at satellites and all the rest of it, communications and so on and so forth. Right. Hello, Brickification, just become a new subscriber. Thank you to you. Now, I've got some latest news for you right now. RTX reports. This is the report yesterday. I'm going to give you some of the headlines in this, and let's see if we can make money from this stock. So let's go over now and see if we can make money from the stock by looking at the numbers taken from the earnings. Do the numbers add up? Let's look over the numbers right now, and then we're going to go into a much deeper dive on the stock. So here we go. Let's look at this. RTX reports Q1 24. RTX delivers strong 12% sales growth. Q1 book to a bill of 1.34 with an RTX record backlog of 202 billion. Reaffirms full year outlook. Things are going to look very, very nice for this company going forward this year, I'm sure. Let's have a look at some of the headlines, and I'll zoom in as much as I can to make it as clear to you as possible. First quarter 24 sales 19.3 billion, up 12%. Very nice indeed versus prior year on a reported and organic basis. GAAP EPS of 1.28, up 32% versus prior year, which it included 0.29 of acquisition accounting of adjustments and a 0.23 benefit from net significant and or non-recurring items and restructuring. Adjusted EPS of $1.34, up 10% versus prior year. Operating cash flow of 0.3 billion, free cash outflow of 0.1 billion. Gross proceeds of 1.3 billion from the completion of divestiture of Raytheon cybersecurity, intelligence and services business. Company backlog of 202 billion, including 125 billion of commercial and 77 billion of defense. Realized 105 million of incremental RTX gross cost synergies. Now we know this is all good. However, is it still a good buy? Is it too expensive? In a minute, we're going to provide you with the intrinsic valuation and see if it's still a good buy for you, and see who's buying on the inside, who's selling on the inside, profitability score, and all the rest of it. Reaffirms outlook for full year of 2024. Sales of 78 to 79 billion, adjusted EPS of 5.25 to 5.40, and free cash flow of approximately 5.7 billion. So the outlook, the guidance, all looking nice, right? We like that. Very, very nice indeed. I've also got some more news here just out for you. RTX breaks ground on 115 million expansion of Alabama Missile Integration Facility. I'm not going to go into all of this. This review would be 3 hours long if I did, but this is more good news coming out of Raytheon, expanding and so on and so forth. Right, let's now go and look more into the numbers, see if we can make some money from this stock. What do you think? Is it going to turn a profit for you? Well, we're about to find out. If you are new to the channel, please do tap like. If you leave it will share the video out to more people. And of course, if you subscribe to the channel, you'll be notified if you ring the bell of breaking news as well. Okay, let's have a look at it now and go over now to the numbers. Starting off with the intrinsic valuation. Good news, we have no health warning on this. Let me share with you the intrinsic value. Undervalued by 26%. We say it's worth, base case scenario, $137. We are at 101. Great. What about the best case? The best case is 180, 44% undervalued. Worst case scenario, 9% undervalued. So the intrinsic valuation of this stock is looking very, very, very nice indeed. However, that's not enough. We cannot take that as fact. We need to look at more numbers, do our own calculations, and see if we can come up with more information. This is not enough on its own. All right. Okay. Let's have a look and see if we can make some money from this stock. All right, defense. Let's go down now into the financials. Let's dive deep into the financials as we go into space and have a look. You ready? Do you like that new visuals I put together for you? Brilliant. This is being made during a live video as well. All of this is being made as I sit here live on my own in this studio. We believe this is the best live streaming studio on YouTube TV, and I'm producing and editing all these videos live as it comes. I hope you're enjoying it. I do enjoy making them for you. Anyway, let's go. All right, now then, the financials. The financials are 68.9 billion on the most recent range, and we're up 3% and expecting to increase. 3.6 billion operating income, up 11% and expecting to increase. You can see if I zoom in, 3.2 billion net income, up 0.1 and expecting to increase. Bit of an S-curve there. Nice. Financing cash flow up 5%. Investing cash flow up 1%. That's a negative. All right. Operating cash flow up 1%. Now, if you're thinking, would you like targets of when you should sell this stock? If it's the right time to buy it, right time to sell it, looking at the trend line, the technical analysis that is provided by Sensei Crypto, that will come up at the end of this video. I will point you to that. That video is being made separately, and Sensei is doing that and will send that to me, and I'll give you links for that at the end. So all your trend lines, your levels that you want to buy in and sell on, and all the rest of it, that's all being done separately for you, and I'll give you links for that at the end of the video. The balance sheet, 161.9 billion in assets, of which 6.6 billion is in cash. Great. 102 liabilities, of which short-term debt is 189 million and long-term debt is 42 billion. So we do have a lot of debt, but very often these big companies like this find it's worth holding debt. 41 billion in debt. 41% of their liabilities is debt. We don't like that. Raytheon has a lot of debt. However, they obviously feel they can service their debt. I mean, we have got in cash, we do have 6.6 billion. So we can't pay all our debts off today, even if we wanted to. But nevertheless, we do have a lot of debt with this company, but it's a sort of company that can afford to live with debt. So even though solvency doesn't look great, we're not majorly concerned with this company. It's got many years of history and a wealth of experience, and it can afford to live with this debt. However, we'd prefer to see it come down, particularly with the rates as high as they are. 18% gross margin, operating margin 5%. These are all positive. These are all good. Net margins are up and increasing. FCF margin, all good. We're not a company losing money. We're making money hand over fist. However, how does it compare to the competition? We'll share with you in a moment. So the profitability is 49%. It's not the highest we've seen. There might be a better deal for you, and we'll share that with you in a minute. But we do have a green ROE that's increasing. Positive free cash flow, that's good. Positive gross profit, that's good. It's just positive revenue growth forecast is 49%. We could do better. Solvency score, as you can see, it's a low 35. We're not red, but we're just turning amber. We're nowhere near green. That's when it goes over 55, 60%. But low DE is good. Long-term solvency is good. Short-term solvency is good. It's just a low Altman Z score. Again, even though we've got a lot of debt and the solvency score is low, we're not concerned so much with this company. That's why one single metric is not enough for you to decide whether it's the right stock for you to buy. You need the full analysis, the full history, what's going on, new contracts, news, who's buying, who's selling, all of this stuff, all right? Now then, this is the issue we got here, right? RTX has a 1% downside from Wall Street. They feel it's overbought now, nowhere for it to go. I don't agree. We've just got this news. The deal is just going through. Remember, Wall Street only analysis that they have in front of them. They don't really look at what's around the corner. They're traders. They're not investors. Wall Street are in today, gone tomorrow. They don't care about the stock. They're just trading the stock. That's it. But we know there's good news coming for Raytheon. We know there's contracts coming. We know there's a much more to this company right now. So even though we don't have the forecast right now, which is why the stock is maybe perhaps undervalued, there's plenty of growth coming. So I'm not concerned about this at all. The highest forecast is a 24% upside. And that's probably where we'll end up, which is great, which is about 10% more than the S&P. So it can catch up the S&P, or if you prefer the security, just own the S&P. The S&P, like I own, owns Raytheon. So you've got it anyway. So you could look at it like that. If you don't want the risk and the drama, just buy the S&P. That's what I do. Anyway, the competition. If you want the competition, I'm going to give you a link above my head in a moment and down below in the description where you can use the software that I'm using for free. My members get this. They also get access to the premium software with a lifetime discount, which makes my membership for free. Okay, so stick with me for that. Now then, we do have some selling here for insiders. They sold though. Let me just zoom into this. They sold during the last 12 months. Raytheon insiders bought 8,000 shares. Sorry, $8,000 worth. Nothing, but sold 3.4 million. Okay, quite a bit, but nothing really compared, that's over the last 12 months, compared to the scale of this company. We often see Google, Microsoft, Apple, these sort of trades being done by the CEO, CFO, directors because they can afford to. Not a major issue. However, it's worth noting, right? The last transaction was March the 8th, 2024, and that was done by EVP and Chief HR Officer who sold $9,500 worth of RTX. Again, $9,500, it's probably a tax position, not a big deal. But over the last 12 months, 3.5 million or 3.4 million shares have been sold, majority here, all in the last few months. Okay, just worth noting. No insiders buying at the moment. Okay. We've got a very small amount of short interest. No one's going to short this. Absolutely crazy. It's like shorting Amazon or Apple or any of those things. No real point. Very small amount. There's always a little bit, but nothing. So there's no short squeeze, nothing like that coming down the line. 1 week ago, defense stocks rally. This is what we're talking about. Let's have a little listen in here to this latest news. Here we go.
Moving a bit higher this morning, given, of course, the rising tensions in the Middle East. Morgan Brennan's at CNBC HQ and has more on what this is going to mean for that industry. Morgan.
That's right, David. And actually, we're fading the gains here a little bit. But defense names like RTX, Northrop Grumman, General Dynamics, L3Harris, Lockheed Martin, which also got an upgrade to overweight at JPM this morning. They've all been rallying after Iran's thwarted attack on Israel. And the key question for investors here is, does it mark a market sentiment shift after defense stocks underperformance to the S&P both year to date and over the past 12 months? Now, remember, the prime contractors have already been ramping production amid increased spending on weapons systems, most notably missiles, missile defense, munitions, thanks to Ukraine, Israel, surging demand from U.S. allies. These were all capabilities, by the way, on strong display successfully over the weekend. And yet, margins have struggled to grow, even as sales have rebounded notably over the past year for the defense contractors. Ongoing supply chain issues, lingering effects of inflation to blame there. 3 things to watch here in the near term. 1, can the situation in the Middle East de-escalate? How does Israel respond to what was an unprecedented attack launched for the first time from inside Iran? The U.S. has reaffirmed its commitment and allies to Israel, but also signaled to the U.S. that it doesn't support a direct counterstrike. 2, do U.S. lawmakers come together on the long-delayed defense spending supplemental? This is $95 billion total, including Ukraine. It's $14 billion for Israel specifically, if that portion is made standalone. Top line defense budget, it's up 3% this year, 2025, poised to be 1%. So more funding would be significant for the sector. And 3, lastly, earnings for the defense companies themselves. Those kick off next week. Some contractors have already signaled they expect to see margin growth in 2024 as the year unfolds and as those lingering supply chain issues begin to normalize. But guys, one area to watch for investors in the sector this week is really going to be Congress, to see what happens in terms of that defense spending in the near.
And that's what we know. We now know we've got that deal. So that's why this is so good. If we look at RTX as we speak now, it is starting to come up. This stock is going to do well, in my opinion. It does look undervalued. and I think that this is going to do well. We will provide you with the chart so you can Sensei will do all the levels that you can find support and resistance and all the rest of it. That'll be a follow-up video to this, so you will want to see that. Okay, let's go back to here and wrap up my review. I hope you've enjoyed this review so far. If we look at the last 90 days, let's go over to here just a moment. The last 90 days, we have seen sentiment, positive sentiment of 47%. That's increased to 59% over the last 30 days. Last 7 days, 56%. Just slightly back, but today 45%. We're just people are on the fence because, of course, we don't know if we're going to get the bill passed, but we will. Okay, I'm very confident of that. It's already been sold. It's just not been confirmed, but we know it's happening. All right, so there we go. All of that is good. All right, so I'm very, very bullish on this stock. However, if you don't want the risk of it, of course, you can always simply buy it with the S&P if you prefer. But I think this is good. You might prefer a much, much smaller cap like Mobix. We reported on it earlier. That's doing very well. That's got a deal with Raytheon and Lockheed to supply parts and chips, semiconductors to the Javelin weaponry. So that's very interesting. So you might find that worth a buy. That's a much, much smaller company. It's regarded as a penny stock, under $5. I've just done a major review of that one. So you might want to go and check that out. So what do you think? We are talking space, defense, and are we going to go flying through space at the moment and pick up a deal here? What do you think? But it's certainly a time to talk about defense. So what's your thoughts? I'd like your thoughts on this. If you leave me your thoughts and comments in the comment section below this video, I will reply to everyone, all my members' comments, and I'd like to get your thoughts on this. Does this add up for you? Does this make some sense? Can you make money on this stock? Is defense the way to go right now? So click above my head for all those links. Alpha Spread, if you want to get my software, down below in the description. If you are a filmmaker or a YouTuber and you'd like to know how I make all these videos live like this, other people have a team of 4 or 5 like Meet Kevin, and they make them over a period of time. I do them all live. If you'd like to know how I put this studio together, if you're a gold member of my channel, I can have one-on-one training with you and help you do exactly what I am doing. And you've got to build the machine that builds the machine before you go live. That's my opinion. Anyway, a bit like Elon Musk, right? Click above my head, down below in the description. You'll find all the links over here and over here. I'll also post the some more information, more analysis, and when that video is available for the technical analysis on the stock, that'll be there as well, also below in the description. If you see here as well, underneath me here, we go live 12 hours a day in our extra channel, providing service, support. We answer questions. We're here to answer your queries. Each of our members, it's a members only channel. It's only 99 cents though. But a members only chat, so we don't get any people trying to promote stocks or talk nonsense or what have you. It's just to help people, and we go live 12 hours a day in that channel. That's it from me. This was a special extended super video. I hope you enjoyed it. I've downloaded all these extra content today to make this look like this for GoDB, who gave me $100 super chat today to make this review like this. I hope you like it, and there's more to come, including all the technical chart analysis. Above my head, down below, over here and over here. Until next time, as always, take care of your money, yourselves, your crypto. Most importantly, take care of each other.